before we get into the configuration side of things, I'd like to take a look at where smart pricing matters or how smart pricing comes into play. There's really three different places that this comes into play. And again, this is way oversimplifying the concept. But starting with, for example, if we're using any of our catalog interfaces, and this is true whether we're using SmartyCAD, using a NextPart integration, going direct to Napa, and or using any of the other catalog integrations like TurboParts or the ST, AC Delco WIP. As we go out through any of these, and I'm going to use as my example our Smart Jobs piece. And if we're going to add a job onto a transaction, so we'll start with something very simplistic like just doing our brake front disc pads. I grab that job and it's going to source my parts, both brake pads and hardware kit from my catalog as I click on go. And it's going out to find not only pricing and availability as it comes back in, and I apologize, my O'Reilly supplier not happy with me today, but we'll look at Napa as my example. As we look at our pricing, it comes back and I get a cost from my vendor. Based upon that cost, it determines what the selling price would be. It's determining and or calculating that selling price based upon the parameters I've got built behind the scenes inside of smart pricing. If I'm using local inventory, and if I have parts that are on my shelf, here's my cost, and then here is my selling price to the consumer. That's using our smart pricing rules for our local inventory. So again, it matters not just for parts that we're buying on the outside, but also parts from our inventory as well. And again, not just our Epicor integrations or what we call SmartyCAD, but other catalog integrations as well. So as we're looking for pricing and availability, finding our cost, determining what the selling price is to the consumer goes through smart pricing. Now, again, it doesn't even have to be that complex. For example, if I just click on the Add Part button, so I'm going to add a part onto the ticket for this customer, and I'm going to just add on a random part. I put in a part number, and then if you notice, I have cost per unit, and I have price per unit. This box right here that says Smart Pricing is checked because I've got it enabled inside of my system. And if I was going to add a part onto a ticket, as I define the cost, if you'll notice, when my cost gets to $1, it says, well, I should sell that for $5.99, which is an 83% margin. If I made the cost $10, now the selling price to the consumer goes to $36.99 and then down to just under a 73% margin. We'll make it $100, and now we're at $200.99, or just over a 50% margin, or last but not least, add on one more zero to get to 1,000, and now 1,500 and a 33% cost plus multiplier, margin on this particular part. So how does it know to vary that markup from 33 to 50 to 73 and then finally back to 83? And again, that's what smart pricing is doing behind the scenes. And this checkbox here tells me that that's what it's being used in order to calculate the price. So again, catalogs are one relevant piece of it, but again, as simplistic as just adding a part onto a new transaction is taking advantage of our smart pricing functionality. As with so many other pieces, if you're going to set up smart pricing or to understand it, we kind of need to look at what happens behind the scenes in terms of how we're going to apply and or use smart pricing. Underneath configuration, down in the parts submenu, as we expand our parts submenu, another menu opens up where we have a handful of different options, including the second one down. And bear with me just one second. Sorry, you're going to have to hang with me just one second. I've got a little bit too much running here on my computer. Let me close down some of my GoToMeeting windows, see if that doesn't free up some resources. Hang with me just one second. Let me see if I can get my GoToMeeting to let my configuration window come back up again. So my apologies. So back onto my configuration window. If you go to configuration and then down to parts, the submenu that I was alluding to or referring to opens up to the right-hand side. On that right-hand side, the second option down says set pricing method. There are actually three primary configuration windows that deal with smart pricing for parts. that starts with this one right here that says set pricing method, underneath that default inventory, and then default outside purchase pricing. We'll touch on each one of these as we go along. If I go back down to set pricing method and bring up my pricing method window, in this window here, as we start to look at the variances, the nuances that are available, the first place that I start is with the two different boxes that exist on this window. For example, if you notice, parts and inventory with a box that surrounds these first 5 options, then outside purchases with a box that in its greater scale goes outside all of the other options as we go along. With smart pricing, you can differentiate your pricing rules between parts that are coming off of your shelf versus parts that we're buying on the outside. So for example, I just looked at brake pads where I had a part in stock. I didn't have hand quantity, but I had the part number in my master inventory and where that selling price would be versus if I was buying it on the outside and where that selling price would be. The concept there is if you're putting inventory on your shelf, you're really doing it for 2 different reasons. One, you're doing it for convenience because it's a lot easier for me to grab an oil filter, an air filter, or cabin air filter off my shelf than it is to wait for somebody to bring it to me or go and get it myself. And the second piece would be, well, it's typically more cost effective. As opposed to paying $3 a piece for that oil filter when it's being brought to me, I can put them on my shelf and pay $1.75. The same concept would hold true as the numbers increase. If I'm putting brake rotors on my shelf, I may be paying $20 a piece for those rotors when I'm buying them on the outside, and I'm paying $15 a piece for those that I'm putting on my shelf. So I'm saving $5 by putting it on my shelf. The variation in pricing rules between inventory and outside purchase is there so that you can not only save the money that you're putting out in order to put those parts on your shelf, but also recoup the benefits of that. Because, for example, let's use just a straight 3 times cost plus multiplier. If I buy those rotors for $20, I mark them up 3 times, and then I sell them for $60 to the consumer, I end up putting $40 in my pocket, meaning there's a $40 profit on that part based upon the cost. If I buy those for $15 and I mark them up 3 times, I sell them for $45, and my delta in terms of what I make in profit becomes $30. So by putting the part on my shelf, saving the $5 in cost, the only person I'm really benefiting is the consumer because they're paying $45 versus $60 as opposed to if I was buying it on the outside. I'm making $30 in profit on the one that's on my shelf versus $40 on the one that's on the outside. Now the reality is, well, if I could sell it for $60 when I buy it on the outside, why wouldn't I sell it for $60 when I put it on my shelf? And therefore take advantage and or realize the benefit of having that part on my shelf monetarily as well as just from a cost perspective. So as we look at our pricing rules, outside purchase or parts and inventory versus outside purchase. So that's kind of the first differentiation between the two. Then underneath each pricing method, we have a handful of different ways that we can use smart pricing. Starting with the very first one that's at the top of my parts and inventory screen says to use a cost plus multiplier. Now a cost plus multiplier is very good at what it does because it just does some very simple math. Meaning with a cost plus multiplier, I'll establish that, let's use 3 times as my delta to be my cost plus multiplier for all of my parts. In this case, I've got it for my inventory items. So if it's a 50-cent part, a $5 part, a $500, a $50 part, or a $500 part, we're just going to mark them all up 3 times. The reality is, at that 50-cent part, we'll sell it for $1.50, and quite honestly, we're probably being a little bit too cheap. That $5 part's going to be $15, and maybe we're getting closer to what the expectation would be, but maybe still on the low end. That $50 part's going to be $150, and now we might be pricing ourselves out of that job, and that $500 part's going to be $1,500. And again, good luck. Let me know how many of those not only sell, but see customers coming back to you after you've finished that invoice. But so a cost plus multiplier, again, it just does some very simple math. Give me a number, and I'm going to multiply a value by that number. So a little bit smarter than cost plus multiplier is what's called matrix pricing. I've got a small chart I'm going to bring up here for just a moment as we talk about matrix pricing. So a matrix is driven by a range of costs. And so what you do is you put in a range of costs, and then the matrix will assess the cost to determine what the multiplier should be. So in my example, I've got 0 to 5, we're going to mark up 5 times. And 5 to 20, we're going to mark up 4 times. 20 to 50, we'll mark up 3 times. And 50 to 100, we'll mark up 2.5 times. So if we go back through my examples, that 50-cent part, we now mark up 5 times, and it's $2.50. That $5 part, we're still in that $5 range. We'll mark it up 5 times and be at 25. That $50 part, we're at that 3 times range. So we're still at 150. And then again, as we get above that 500, our margin continues to diminish or decrease in order to, again, not price the job out of what would be the expectation as is being realistic. Now, the problem with matrix pricing is that as we cross over from one delta to another, there's this immediate loss in profitability. And what I mean by that is, in my example, a $5 part, we would multiply it times 5, and we would sell that for $25. So that's using the matrix, 0 to $5. When we get to 501, well, we have now crossed over that barrier or that barometer to where we're now into that next range. Now we're in this range right here. So 501 times 4, we're going to sell that thing for $20.04. So it cost me a penny more. So it pushed us from this range to this range, and there's an immediate loss in profitability of, in this case, $4.96 in terms of what we're selling that part that was a penny cheaper for versus what we're selling the one that's more expensive. So what we did, or what we came up with to address that, is a concept that we call linear pricing. So in here we've got cost plus multiplier, matrix pricing, 2 options, either supplier or department, and linear pricing, again, 2 options, either supplier and or department. We'll get back to the difference between supplier and department here in just a moment. The difference between matrix and linear pricing is the concept of the linear pricing rules is to eliminate this range, meaning don't cross over from 5 to 501 and immediately drop from 5 times to 4. So the concept of a linear price is there is no price range. There is simply a cost point, meaning at $20, we're going to sell something for 4 times. At 50, we'll sell it for 3. At 100, we'll sell it for 2.5. So that $5 part still gets multiplied times 5 and costs $25. How about if we had a part that costs $12.50? So how are we going to price this? Now, with the old matrix, that would have fallen into my bucket between 5 and 20. We would have marked it up 4 times. It would have sold for $50. The way that smart pricing or linear pricing works is it says, well, how far am I between this and this? So halfway between this number here and this number here becomes $12.50. Halfway between here and here would be 4.5. So we're going to multiply that times 4.5, which ends up equaling $56.25 as the selling price to the consumer. How about a part that costs $30? So if I said, all right, a part that costs $30, we would typically, through the old matrix, have marked that up 3 times because it fell into, 4 times because it fell in that bucket between $20 and $50. 3 times it fell in the bucket between 20 and 50. So $30 part is a third of the way from here to here. So a third of the way from here to here would be 3.66, as opposed to selling it for 90 using a traditional matrix that ends up being $110 at sell price based upon using what we call linear pricing. So what linear pricing is intended to do is it's intended to smooth out that line, meaning don't have these dramatic drops in profitability as we cross over from one point to the next. So as we look, cost plus multiplier, matrix pricing, or linear pricing by supplier. Linear is the most intelligent of the 3 in terms of the amount of math that it does, and so it then also smooths out that curve. As we move over from 5 to 501, that's still close enough to that $5 delta that it would use that 5 times cost plus multiplier, and every cost point in between, it uses the math to determine how far along that sliding scale am I to determine what its selling price for the consumer should be. Parts inventory and then outside purchases. Again, we can establish differing rules between parts that are on our shelf and parts that are on the outside. If I was to go through this list one by one, you'll find that the same 5 options that exist for parts that are in inventory also exist for parts that we're buying on the outside, with one additional option, meaning matrix pricing and or linear pricing, both by what we call associated labor. As we look at my options, and the one that I'm using for parts that are in inventory is what's called linear pricing by department, meaning I'm going to have different pricing or variable markups based upon whether it's an air filter versus an oil filter, or a brake pad versus a tire. And so I can get to that level of detail where I say, based upon the part type, I'm going to have a specific rule that I use in order to mark the price up. When we're buying parts on the outside, we won't often have a department for that part until we either get back over to our transaction, or depending on if we're using department as a required field, potentially not at all. So using department to differentiate price for outside purchases becomes a little bit more difficult. The two easier or more effective methods for outside purchases would either be using linear pricing by supplier, and that'll give me an option to vary my pricing based on whether it's O'Reilly versus Advance versus Napa versus whoever else I see fit, and or what's called associated labor. And this is allowing the type of job that we're performing to drive the markups, meaning if I'm going to do an install brake rotors job, then it says I'm going to use my pricing for brake rotors, versus if I'm doing install water pump or I'm installing a serpentine belt. So you can get to that level of granularity where it's literally the job itself that's driving the markup on the part. So take a look at how this all works behind the scenes. Starting with, we've got linear pricing by supplier set for my outside purchases, linear pricing by department set for parts that are on my inventory or in my inventory. As I leave my configuration screen, I'm going to go back underneath configuration, down to parts. We'll go first to our default outside purchase pricing. I'm going to bring up my configuration window, and when I do, it brings up this list or this chart here. Now the tab that we want to start with is our conversation in is this first tab that says settings. Now this is my default matrix, meaning if I don't specifically define a rule for a particular supplier in this case, then it will fall to the default, meaning it'll always want to have a rule that covers every possible supplier. But again, if I haven't established one specifically for a supplier, then it goes to my default. Now this window looks a whole lot more complex than it really is, meaning if you look at the way that we had kind of discussed a linear price, costs from $0 to $1, we're going to mark those up 5 times. Costs at $5, we're going to mark it up 4 times. At 20, we're going to mark it up 3, and so on down the line. So as I talk about cost points, all I'm doing is I'm establishing when a part costs me this, I'm going to sell it for this. Now we've got cost plus multiplier, margin, and we have markup. And they're all there just because different people think about that same calculation in different ways. They're all variations on the same theme, meaning a 4 times cost plus multiplier equates itself out to a 300% markup and or a 75% margin. If I say, well, I'd like to get a 77% margin on a $5 part. If I just change that to 77, you'll notice it says, well, that means that you're going to need to apply a 4.35 times cost plus multiplier, or that works out to be a 335% markup. So all variations on the same calculation. So as we're entering them in, we use whichever one is most applicable. Again, if I said, well, at $20, that should be 3.25. I just change that value there, and it recalculates out what that means from both a margin and a markup perspective. So each of these is tied to one another. We change one, and we'll change them all. Beneath that, we have a section for minimum price. Now, in what we're looking at with our default, the minimum price really is most applicable down here in this very first range, meaning everything from $0 to $1 we're going to mark up 5 times. But if I said, well, I want my minimum price to be $1.99, and so that's going to be my minimum price. If a part costs me 5 cents, I'm going to multiply it times 5, and that becomes a 25-cent part. But the minimum price says to be $1.99. If a part costs me 60 cents, then we multiply that times 5, and that works out to be $3. So the system says, well, that exceeds the minimum, so therefore it's going to be $3 as the selling price for that part. So the minimum price most applicable in that bottom range, but we'll talk about how it can apply to other matrices here in just a moment. Down here towards the lower left-hand corner, it says Global Parts Rounding Options applies to all matrices. Important to note that we can create as many different matrices as we'd like, both for parts that are on my shelf and parts that I'm buying on the outside. However, when we set the rounding parameter, the rounding parameter will apply to all of them, and we cannot vary. So I can't say round in-stock parts up to 99 cents, round parts on the outside to 50 cents. We're going to set that rounding parameter, and we're always going to round based upon that one rounding parameter. Notice there's only two options here. There's no rounding, or there's round up to. The system will not round down. And I've got mine set to 99s, meaning if it does the math and it figures out 5 times that part equals $3.15, it'll round it to $3.99. If it's $3.98, it'll round it to $3.99. If it's $3.01, it'll round it to $3.99. It will always go up. It will never go down. And our options for rounding are either to 2 digits behind a decimal at 50 or 99, or 1 digit or in the hundredths place to either zeros, 5s, or 9s. So 2 different options as far as rounding is concerned. Out here to the right, we've got a box where we can figure out or use this to calculate out what the changes we've made would actually mean. So as I'm looking at a part here, well, what would it cost, or what would be the selling price to a consumer on a part that costs $10? So as I put in my sample cost and hit calculate, it says that based upon where our matrix is currently set, it's 33% of the way from cost point to cost point, meaning it's 33% of the way from here to here. So 33% of the way from here to here, or here to here, would be 74.87 or 3.98 as a cost plus multiplier. As we're continuing on down, that means $39.80 would be my selling price with the rounding parameter, $39.99, and then the minimum that come into play. So it's just set to that rounding at $39.99. So the sample cost can be used to help us take a look and say, what if? If my part cost me X, what would that come up at point of sale? So we use the calculate button to give us that what if scenario. A little bit beneath that, a minimum profit margin, and then the default cost plus multiplier for manual price count. The minimum profit margin will help to determine when the system tells us that the part has fallen below a minimum price. So we can establish that at whatever level we choose. And the default CPM, or cost plus multiplier, for manual price calc is driven by, as we're looking at our part window here, if I hit price calc down there, it's asking, or once we've established our either supplier or department, it asks us what should be the value that comes up as the cost plus multiplier in this window here. So again, all configurable. Now this is for outside purchases, so 2.5 times my default cost plus multiplier if we're using that manual price calc piece. A couple of other tabs that exist here as we move along. I'm going to skip over the second one that says sales analysis for just a second to go to the tab that says suppliers. So this is my list of suppliers in RO Writer. And these are the ones that are included in this price matrix. In my case, I have 4 suppliers that are excluded from this price matrix, my tire suppliers as well as my battery suppliers. So everybody else falls into this matrix here, but I could add another matrix if I wanted. Let's say I wanted to have a matrix for dealer parts. I could put that in there. If I wanted a matrix for my fluids, I could add that in there as well. Again, no limit to the number of different suppliers that we can have. In this case, where it says sales analysis, the tab in the center that I skipped over, this is intended to help you based on historical information determine where we should potentially set these values. I'm going to hit the button in the lower right-hand corner that says Run Analysis. What it will do by default is it will look at a year's worth of historical data. So back to 2014, this same day, and it looks to see, well, what was my historical performance? With it, this reads, and let's just start with our 5 to 20 column here. My total sales, so my revenue that it was generated by parts that were outside purchases, not tires and batteries, that fell in the $5 to $20 range was $53,009. It was $18,022 at cost, so that meant I achieved a 66% margin on those products in the last year. That represented 27.83% of my total cost. So if I was to add this column where it says costs up and do the math, this was almost 28% of my total cost, so a fairly major range for me as far as where my parts are coming in. My average cost was $12.84, so based upon where I've got my pricing rules set right now, this category should achieve about a 73.5% margin if I was to continue on with my matrix set as they are right now. Same with 20 to 50. Again, that's 35% of my costs, or just under 35. I was at a 59% margin last year, 66.22 based upon if I was going to use the margin or the matrix rules that I've got in place today. Down here where it says aggregate profit margin, this is a rounded number, so they'll always come up to, in this case, 69.00 as the behind the decimal digits. But this is telling the system that, this is telling me that based upon my historical performance, if I applied my pricing rules, my matrix, as it sits today, I should achieve about a 69% margin. Again, for the parts that fall into this product category, as you recall, I eliminated both tires and batteries from this consideration. So the sales analysis tool can be used to try to give you an idea not only of what's been done historically, but if your current pricing rules get applied to that same historical information, where we should approximately end up as we come out through the other side. Now I've got my default outside purchase. Underneath that I've got two other matrices I mentioned. So I had a battery matrix in my system, which I'm using when I'm buying a battery on the outside. And for batteries, as opposed to using a cost plus multiplier, if you notice, I've got zeros all the way along. So either I'm giving away free batteries, or what I'm actually doing, I'm using what I call tiered pricing, meaning 0 to 40 we're going to sell for $59.99. 40 to 60 we're going to sell for $79.99. 60 to 75 is $99, and so on and so forth as I continue on. So I'm using in between each of these cost price points a minimum. So while it's still doing its assessment of the cost, it's now using a minimum price to establish a selling price for each of those. So in my case, I've got essentially 7 different prices for batteries based upon the cost. As I get above $175, it will still go to that multiplier, 1.33 as the cost plus multiplier. But as we get above that range, that's when it will use the math as opposed to just looking at my minimum price. As I was looking at my matrices, I also had one in there for tires. As I look at tires, what you'll notice is that I just have a flat markup, a 1.30 times cost plus multiplier, a 23% margin. It's across the board, and you'll notice my costs only range from from one to another by a penny. And that's because I'm basically saying that I'm not concerned so much as what the cost of the tire is. 1.3 is going to be my cost plus multiplier, whether it's a $50 tire or a $300 tire. That's just going to be my standard markup for those parts. One last piece that we're going to go to before we get out of our configuration windows. That means I'm going to close out of here. I'm going to go back over to configuration parts and then down to default inventory pricing. What you'll notice is this window is almost exactly the same. And I say almost exactly the same because this screen here looks exactly the same options with the exception of, in the lower left-hand corner, there's buttons that say Save and Update Inventory Pricing, Disable Smart Pricing, and Enable Smart Pricing for inventory parts under this matrix. Because this is applying to my inventory, we can use this Smart Pricing rule to establish the selling price for parts that are on my shelf. So those brake pads that were $27.99 and had a selling price of $69.99. If I was to come in here and change my matrix to apply that to all the parts in my master inventory, I'd hit that button in the lower left-hand corner that says Save and Update Inventory Pricing. Now, important to note that my inventory rules were set to do linear pricing by department. So you'll notice my tab out here to the right says Departments Not Suppliers. If I was to look at that, you'll find that I only have a handful of parts that are included in my default. I've got half a dozen different matrices that I've built underneath my inventory parts. But anything that falls into this matrix, were I to hit this button that says Save and Update Inventory Pricing, would automatically get applied the rules as they exist here. So again, the options or the difference between outside purchase and inventory is really these icons or these buttons in the lower left-hand corner. I can use Save and Update to apply the rules to all the parts in my inventory. the one beneath that that says disable smart pricing for inventory parts, and then enable smart pricing for inventory parts. These work in conjunction with one another. Meaning if I was to go look at a part in my master inventory, so I'm going to go ahead and just pull up Jennifer Quinn again and go find the View Add Edit screen of my inventory window. So right in this window here, on this Other Information tab, and let me click on Edit just to make it a little bit easier to see. In the upper right-hand corner, there's a button there that says No Smart Pricing. What that No Smart Pricing does is it tells the system that I don't ever want to use smart pricing for this particular part. I have established a selling price for this part based upon what I've got inside of the system, either as my cost or I just wanted to add something in there. I've got a $1.09 cost for a quart of 5W30 oil. I don't want to mark that up 5 times and then round it to 99 cents because now I'm selling oil at $5.99 a quart. It's going to be tough to figure out the blend or mix of parts and labor on a $25 oil change when I've got $30 in oil just taking up the majority of the balance of that transaction. So we can tell the system to not use smart pricing. Now, if I wanted to do that for a category of parts, as opposed to going through them one by one, as I just started to my 5W30 oil, I could tell the system to disable smart pricing. It essentially wheels through all the parts that are in departments that fall underneath whatever matrix I'm looking at, and it checks those boxes. Enable smart pricing does the opposite. It says, well, you know what, maybe I had disabled smart pricing for a handful of parts. I'd like to re-examine that and go back and start using smart pricing. I could tell the system to enable smart pricing for all of the inventory parts. So again, adjust my selling price based upon the rules I've established, tell the system not to use smart pricing, or tell the system to use smart pricing for all of the parts. And that's literally the difference between the outside purchase and the inventory in terms of the functionality that's available. So we can use those buttons in the lower left-hand corner. Now, one last piece before we leave the configuration of smart pricing, and that is underneath configuration, back down to parts and set pricing method. I'm going to go back and I'm going to change my pricing method for outside purchases to what's called linear pricing by associated labor. Notice there's an asterisk or a star to the right of each of those options. And that's because it says that this option essentially doesn't work as we're utilizing catalogs other than SmartyCat. This is kind of designed to use SmartyCat or through the Add Part icon. What you'll notice is if I select that, then not only does another option appear down here, but as we get over into our configuration window, we'll have an extra tab that we'll configure. So bear with me a second, we'll get there in just a second. Before we get there, there's some options here as far as smart pricing is concerned that we want to address, and that is when correcting required entries during finalize. Essentially, that says as you hit finalize, the system will likely pop up and say some items need to be corrected before finalizing. We have options to either use department, supplier, and or the job itself that is being associated to drive the pricing. If I change the department from one to another during the finalize process, and that would change the selling price of the part, should I enable smart pricing, disable smart pricing, and or prompt the user to accept the price change? So you know what, I had a part on the ticket that was a battery, and it wasn't assigned to the battery department, so it was using my default pricing. As I go through the finalize process and we pick up that department, now it says, oh, I know I'm a battery now. So therefore, I'd like to change the price from X to Y. And so again, your options are, should it just be allowed to do that? Should it not do that? Or should it ask me whenever we do that? So you have 3 different options there. If you're going to enable it, then I would suggest you prompt, only because that way, as you're going through the finalize piece, you would know why the system changed the price if the price did get changed through that smart pricing piece. When cutting and pasting parts from one job to another, you'll notice that these options are only available as we're actually using linear pricing by associated labor. We added a part onto a ticket and it was assigned to install brake pads. And then we moved it to install brake rotors. And if those 2 jobs had different pricing rules, should we change the selling price of the part? Or should we leave the price where it was as we first added it through our whatever catalog we added it on? And the last one down here, it says, when parts and inventory are not in stock, should we use outside purchase rules, parts and inventory rules, and or should we use the inventory price if greater than the calculated price? What essentially that says is, I usually stock this air filter. part number ABC123. I paid $10 for it, and I sell it to the consumer for $2 or $25. I go to add it onto a transaction, and it's out of stock. But it just so happens I queried my local vendor, and I can get it for $7, which times my 3 times cost plus multiplier means I'd sell it for 21. Well, if it was on my shelf, I'd sell it for 25. So shouldn't we use the on-shelf price if it's greater than the outside purchase calculated price? So it's just asking us which it should use by default for a part where the on-hand value is 0, outside purchase and or inventory, and then secondarily should do that calculation to determine if the inventory selling price is greater than the outside purchase selling price. So a handful of different options about the behavior of SmartyCat as it gets applied to point of sale. I'm going to click on OK and then hit Configuration, Parts, and then Default Outside Purchases here for just 1 second. Bear with me just a second. GoToMeeting has decided to hang on to my configuration screen for just a second. We'll be right back with it here in just a second. So I'm sorry, configuration, parts, and then default outside purchase pricing. As I change that option to using linear by associated labor, what the system does is it then gives me the option to build matrices based on either my categories and or, again, all the way down to the level of granularity of every labor operation could have its own individual markup. So whether it's brake rotors versus brake pads or water pumps versus serpentine belts, you could get down to that level of granularity as we go through using linear pricing by associated labor. As that's our pricing methodology, one other piece that merits conversation, and that is if I'm going to go out to the catalog. So I go out to Smart Jobs, and I'm using a Smart Job. We can predefine which category or which job to use. However, I'm just going to do a generic search as a category. We'll do braking system just because I've used that as my example on a couple of occasions. You'll notice a box comes up and it says, well, you know what, would you like to define the job that we're going to use? Meaning we're using linear pricing by associated labor. So I could tell the system as I grab parts, I'd like to use brakes and install front disc brake pads. And as I answer that question, now it knows, well, here's how I'm going to price parts that we're buying on the outside based upon the job that we're actually performing. So again, if you're using linear pricing by associated labor and you go out to do a Smart Job, it'll already have pre-established behind the scenes which job it should use, which markup is applicable. As we use just the category search and or the search functionality of SmartyCat, that's when you'll get that message box about, well, tell me which job we're going to use so that I know exactly which one we should use to price this. So I'm going to hit the X in the upper right-hand corner to close back out of there. I've got my friend Jennifer quitting with her 2011 Chevy Malibu. We're going to do one last piece as part of our presentation today, and that is in configuration, we have smart pricing, but then as we leave configuration, over in inventory, we have what's called global pricing. Out here to the far right is my global pricing piece. Smart pricing only impacts price 1. What I mean by that is, if you're familiar with RWriter's inventory module, you can assign up to 5 different price books for an individual part. So in my case, I've got them called retail, list, net, employee, and transfer pricing. Global pricing is how we would adjust the pricing other than price 1 and or apply all of our matrices from top to bottom. What I mean by that is when we were in smart pricing there just a moment ago, on the inventory side, there was a button there that said enable and or apply smart pricing to inventory for parts under this price matrix. That would go ahead and apply it to, let's say, for example, my brakes and or my maintenance items, but I'd have to go through each one individually. If I wanted to apply all of my matrix pricing rules at one time, I could use global pricing. Notice that box there is grayed out. So using smart pricing, therefore price 1 is going to get applied using my smart pricing rules. But if I'd like to adjust price 2, 3, 4, and 5, in essence, I've got a couple of different ways we could do that. I could go through my departments, and let's say we'd like to adjust for my oil filters, and every oil filter that costs me between $0 and $3, I'd like it to be 2.5 times my list price. I'd like it to be 2.25, and so on down the road. When I hit Update INV, price 1 gets set to smart pricing. Price 2 through 5 gets set to my cost plus multipliers as I have defined them. We can adjust our pricing based either on cost and or what my current price would be. Now, if you notice when I do current pricing, you just have to tell me what percentage above or below your current price. So if I said I'd just like to increase my oil filters between $0 and $3 by 10% across the board, let's just make it 110% of the current list price. And that'll, again, increase it based upon the current selling price, not the current cost. When you hit Update INV, one of the things that Global Pricing will want us to do is it'll want us to kick everybody else out of our rider. What it does as it updates our inventory is it creates a backup copy first. So in case we completely messed something up, we could always have a backup copy we could revert back to if absolutely necessary. In order to make that backup copy, again, as the message box tells us, it wants us to kick everybody else out of our rider. I'm going to answer no to the question. So again, smart pricing and global pricing, two different options that we could use not only to price parts in our inventory, but in the case of smart pricing, through our various catalog integrations as well. Again, SmartyCat primarily among them.